Hello, how are you? It's Mike here from Health and Wealth. We are talking today about a slightly different fund than what we normally do. I've built up my account here. I'm trying to get to 5 pillars of income. 6 pillars of income? Yes, that's right. 6 pillars of income that are paying me $500 a month each. This month, we did pretty well. This past month in October, we reached 3 of them that are paying me $500. First time ever on the account. So, time to move on. Time to take those distributions and continue to build my castle as we go here. And so today's video, as you probably noticed from the thumbnail, is about a ETF here in Canada called HHIS. This fund holds a lot of technology, different products within it. We're going to go over the fund today. We're going to go over what it's done so far. We're going to go over how much it's paid, its total distribution, a little bit more about the fund. Should be a good video. If you enjoy the content, I hope you hit the like, the subscribe. Love to talk to you again in the future about this stuff. But first things first, let's take a look at the ETF share price today. Up 14 cents today. It's at $14.66 here, which is pretty good. If you take a look at it, it just started in January the 16th here. So just a few months ago, came out in at $12.38. Now, for me, I always wait a couple of months, and so I'm glad I did this time. I didn't buy until it was around $10, and so my average is right around $10.30 on this one. But yeah, today we're at $14.16. So that's pretty good. What does this fund do? That's what I want to look at next. So I'm going over to Harvest website. We're taking a look at HHIS Harvest Diversified High Income Shares here. We'll do a little overview. The Harvest Diversified High Income Share ETF offers a multi-sector portfolio that captures a diverse selection of trending companies. That's a good keyword right there, trending, that are positioned for strong growth. So we're not picking crazy companies like in Alti. We're picking strong companies with potential for strong growth. It's designed to deliver consistent high monthly income alongside growth opportunities of the share price. We can see it's happened so far, right? This ETF holds a portfolio of Harvest single stock ETFs combining the benefits of income generation with the exposure to leading businesses across various sectors. So it sounds good so far, right? So they own some of these companies in here. Sounds good so far. Let's take a look at the fund focus here. I'll highlight it in blue for you. Actually, I'll unhighlight. Can I zoom in? Well, it won't let me zoom in. Sorry about that. So the Harvest Diversified High Income Shares is a TSX fund here. Seeks to provide high monthly income and growth potential from a portfolio of Harvest single stock ETFs that use a covered call strategy. As of March 31st, 2025, the underlying ETFs in this ETF employ modest leverage to create overall leverage exposure of approximately 25%. And high monthly cash distributions for its unit holders. Units of the ETF are available in Canada. Here are some of the advantages. Diversified exposure to the top trending companies. I like that. Stock plus a higher monthly income. Canadian trust unit. It's tax efficient. I'm going to take a pause right here. Right now I'm invested in HUI, Misty, Navidi, Coney, and Alti. For me, I have to pay 15% tax on these. I live in Canada. I'm in a tax-free savings account. So I don't have to pay tax on this at all, which is nice, right? So all the distributions come in tax-free for me. Now, it's also talking about being tax efficient. That's going to be more towards the internal workings of the fund itself. They have a tax efficiency here because of a treaty with the US. So it's a benefit to Harvest as well. One ticket solution with lower purchase prices to access the underlying ETF holdings, exposure to underlying ETFs with modest leverage, and high income in Canada. Yes, this is probably one of the highest incomes. I'm not going to say it's the highest, but it's one of the higher incomes in Canada. Let's go up top here. Let's take a look a little bit more about it. They recently had a increase in their distribution. They've been paying out 25 cents their entire life until this month. Now they're up to 26 cents. Total distribution since January is $2.26. AUM over $1 billion. Let's go take a look here. I actually have it on the next screen I wanted to share with you. Give me a moment. Yeah, just over $1 billion. So you can see it's a very popular fund here. And yeah, management fee. Currently 0%, everybody. This is huge. No management fee. That's massive. I think that might be changing in February. I'll do a little more research and let you know in the comments what I find out. But here it is, right? Here's their holdings. Coinbase, Broadcom, Nvidia, sorry. Palantir, Netflix, Microsoft, MicroStrategy is probably the craziest one in there. Meta, AMD, Amazon, Tesla, Alphabet, Costco, Eli Lilly, and Apple. Palantir also pretty wild. They have earnings coming out today. We'll see how they do. Down below it shows you all of the distributions so far. So the last one was 26 cents, and that just came out. Well, it's actually coming out on November 6th. So the X date of that was October 31st, and the record date same date, right? So this is the difference between it and Yieldmax. Yieldmax pays out a lot quicker. Harvest doesn't, right? Harvest takes some time for it to go through. They also have the weighting here above my head of each of the positions. And I believe they go ahead and recalibrate the weighting at the beginning of every single month. So you can see right now the highest weighting is Broadcom and then Nvidia. Now, what happens is these companies do well throughout that month, and then that weighting becomes heavier. And then they focus it to a more of an even weighting at the beginning of every single month. Now, if you want to learn more about it, harvestportfolios.com is the website. The reason I'm bringing it up to you guys is because I'm invested in this, and I plan on investing a lot more into it in the near future here. I went ahead to the TSX ETF, money.tmx.com, and then there's an ETF comparison chart here. I thought this was pretty cool. It doesn't paint the whole picture. I'm going to paint the whole picture for you coming up in just a moment, but I compared it to HYLD. And the reason I compared it to HYLD is because that's another heavyweight here in Canada when it comes to ETFs that pay out a good distribution every single month. This is a fund that I've had in my account before, HYLD. It's not like a super fair comparison because they invest in slightly different things, but the reason I'm bringing it up here is because it is one of the most popular ones in Canada. Same with HHIS. So they're basically just very popular. That's the whole reason I've put them together. I also put HHIC over here, which is a new fund in Canada here. This one is going to be the Canadian High Income, so they only invest in Canadian companies. So current price. Our previous close, well, it's $14.16 right now, a little bit less than that. HYLD, kind of the same deal, right? So give or take a few cents on both of these. I'm going to kind of ignore that third column right over top of my head. We can see AUM here. Harvest has really caught up and surpassed Hamilton's HYLD here in AUM. So we're over $1 billion over at Harvest. We're $933 million at HYLD. The average daily volume, quite a bit more at Harvest, 1.48 million. Distribution yield, 15%. I've got more on those numbers coming up. I did some math for us here. And then the inception date. I mean, HYLD, everybody's been out for a long time, 3 years, right? So it's doing very well for itself. Its share price is migrating its way up a little bit. Since its inception, it pays out 14 cents per share. I always think about these Yieldmax funds I have. They're pretty risky. And then compare it to these two that we're looking up top here. They're really risky. So HHIS and HYLD are just slightly less risky than the Yieldmax funds. Let's continue down here. You can see kind of the 6 month, how it's done here. And I don't know if that's including the distribution, but I went and did some some math for us here. So I'll go over that in a little bit. But here's what it holds, right? So the Harvest broadcast enhanced. So all of the Harvest funds, not just the stocks themselves, but the Harvest versions of the funds that they have. Rumor is that they're adding a couple new funds down the road here, and that will also get included into this. This is similar to like YMAX over at YieldMax. But I couldn't put that on a TSX. I couldn't compare it on here. And I can't compare the Canadian ones on an American site either, right? But they're very similar in the sense that they are using the company's funds to put it into one little envelope. Now, where they're different is their structure, right? So with HHIS, they are using a little bit of leverage where YMAX doesn't. They're only writing cover calls on 50% of the positions, whereas YMAX is the whole position. And then they're also allowing you for growth here too, right? So whereas YieldMax, YMAX is just income only. Okay, so that's where it's different. Up top here, we can kind of see the different companies within it. I really like the next little graph here for us. You can see where the funds are originating. Like, so it's was that like 117% United States. So we're just going to call it mostly American stocks here. There's a few out of the Euro and Euro here, and then 24.99% other. But you can see it's very tech focused, everybody. So this is the first almost negative thing I'm going to say. Tech has been so good for so long that, we're in earnings season right now, and a bad earnings could really tip that scale the wrong direction. So this is somewhere where you may want to exercise some caution with your investing. It's very tech heavy, but it does have some balancing with that, right? They have healthcare in here, and I believe they had some consumer cyclical and communication services in there too, consumer defensive, and then a little bit of other. And then whereas HYLD here has 38% technology, so less. They also have the banks in here, financial services, healthcare, consumer cyclical, industrials, energy, right? So these guys are maybe a little bit more diversified over in the Hamilton fund with HYLD. And then you have your HHIC. These are all symbols that you can type into Google. We have financial services, right? So they got I think they have one or two banks in this fund. Like Royal Bank might be one of them. They also have energy. Enbridge is in it. They have some financials with Manulife in there as well. Other basic materials, communication services. Bell is in this one. TELUS is in this fund. And then technology. I know they also have Shopify as probably one of the biggest companies in that HHIC fund there as well. So I thought that bar graph was pretty cool. And just to exercise that caution, right? 67% technology. If we have a technology slip, then that's going to really affect the share price of HHIS. One more thing, before I show you the actual numbers here. So again, I'm trying to build 6 pillars of income that pay me $500 a month to get it to, $3,000 a month. And, eventually that'll take over and pay for the bills. So I went to my passive account here. I have Questrade. So Questrade, I get it for free. If you want to pay for the enhanced version or the elite version, which is $99 a year, click my link below. Even if you have Questrade, click my link below. I think I get $20 if you use it, but if you're with Questrade, you get it for free. And the rumor is that it's coming to Wealthsimple and a few other brokerages as well down the road here. But yeah, you can see my passive account over the last year. I haven't done anything special in this account. I just keep reinvesting my distributions from YieldMax, so Misty, Nvidia, Coney, HUI, and Alti. And so I'll take your attention to October here. It's been my best month in terms of distribution so far. So $2,013. Here's how it's played out. So I have 113 shares of HHIS, and it paid me $28. I've got Coney, HUI, Alti. Actually, I'm going to stop there. Coney and HUI paying me under $500, And for the first month ever, Alti, Nvidia, and Misty all pay me over $500. So that's why I'm going to take a break. I'm allowing Alti to drip until it gets me at least $100 a week in distribution. We'll see what happens with the share price down the road here, thus the distribution amount. But I'm pumping the brakes on my Misty, my Nvidia, my Coney, and my HHIS. What I'm going to do is take the distributions from them and buy HHIS. I'm going to try and take HHIS to 1,000 shares. I don't know. We'll see what happens by then, but that should pay me $250 a month, which is good, and then allow that to drip the entire time. Not quite my goal, but I've gone crazy over the last 2 years, right? With the YieldMax funds, I've collected a lot of income to build this up a little bit here. And so now I'm going to go with something maybe a little less wild with the HHIS. And by the way, this isn't financial advice. Do your own research. Go back to that Harvest website and study it. Understand the risks, what could happen if we have a market tumble. What could happen to your share price? What could happen to your distribution? It would get lowered after a while. What's the worst case scenario? Know that before you invest. And then think about what's the best case scenario and then gear it back a couple of notches. So really what the plan for me is, I'm going to go ahead and I have $470 worth of margin to pay off right now. So that will be paid off in the next 3 weeks tops. And then I'm going to take $500 out. This time it's not going to be US dollars. It's going to be Canadian dollars. I'm going to buy HHIS with that. I'm going to get paid distributions every week from Misty, Coney, Nvidia, and HHIS to pay off that $500. So I'm preloading the shares in here with $500. I'm going to buy it again. And if we can get anywhere near this $2,000 monthly that we're looking at right now, that means I could buy it 4 times a month. And it's around 71 shares each time. 500 divided by 14, around 71 shares each time. And remember, my target is to get to 1,000 shares, which will pay me 250, 260, maybe even 270 by then. Or maybe the market has crashed and we're down to 20 cents. I don't know. We'll find out when the time comes. But I'm going to continue to buy it because so far, so good, right? So far, so good with this fund, paying an income. Guiding me towards retirement, and that's something I really enjoy. So yeah, that 2,000. This is the first time it's ever happened. Last month was 1,300. So I'm not really banking on borrowing $500 4 times in the month. This time it would have been twice. The month before it would have been 3 times in that month. I could have borrowed $500, right? Same with the month before, it would have been 3 times. So, if I can get anywhere between 70 and 150 shares, that's great. Anything above that is a bonus. And so, again, the strategy with my margins, very simple. I use the $500 margin to buy the shares up front. And then throughout the next few weeks, I pay it off with the distributions that come from my income. And then I just do it again and again and again. And I hope within 10 months, I'll have that 1,000 shares of HHIS paying me every single month. So far, HHIS has paid me $152 in distribution. I'm pretty happy with that. And by the way, thank you for tuning in today. If today's the first time we've ever talked, my name is Mike. The channel's name's Health and Wealth. I talk about high yield distributions, ETFs that pay out a high yield and a high distribution. The channel's been around for a couple of years. And just over 10,000 subscribers now, which is super cool. Really appreciate if you hit that subscribe and the like button. Also, if you can comment below what you liked about the video or what you would like to see in the future for me. I'm always open for suggestions. And, I want to be as interactive with you as possible. So here is the numbers, right? The original purchase price or the original share price of HHIS was $12.53. Its current price at the time of this recording is $14.16. I'm recording it on November the 3rd. And its total distribution so far is $2.26. So calculated total return. This is a number that's important to us. We want to know our total return, not just how much dividend or distribution we've got. We want to know how much is the total we've received so far if we started on day one. So capital appreciation, you can see it's gone up like, I don't know, what's that, like $1.40, $1.36, something like that, 37. So it's up 13.1% in capital appreciation. That's really good. It's decent, that's for sure. The S&P 500, right? Your goal is to make 10% a year. So this one's appreciated 13%. Distribution yield, 18% from that $2.26. So that's a total up of 31.1% so far from January, whenever it came out in January till today. 31%. I know I'd be really happy with that return. In fact, I'm wondering if maybe I am already at that 31%, considering I bought in around $10 and now it's $14. I'm sure I'm pretty close to that 31% being up. If you included the distributions I received so far, plus the share price appreciation so far, that's what's happened with me so far. But I don't know, can this continue? It seems like they have a winning strategy so far. It has been a bull market, specifically a tech bull market, for a long time now. And it only takes a few words from a few people to make that tank and reduce long term. So I'm exercising caution personally, but I am going to continually invest my distributions into that margin. The margin is going to invest into HHIS. And that's my risk level, right? I want to say that to you guys. My risk level is $500 a month for margin, because I know if I lose my job, if the world ends, I could pay $500 off really fast, right? So I do it in $500 increments. I don't know if I'll ever go more than 500. That's my risk level. I don't know what your risk level is. It might be a lot less, might be a lot more than mine. That's just mine. If I went with 1,000, I would feel kind of obligated to, like, I got to pay that down. So 500 is right in that wheelhouse for me. And what it allows me to do again is purchase the shares up front and then pay them off. Right now, I got to pay interest on that margin. But now that I'm switching over to a Canadian fund with the margin, that interest is a little lower than it is with the American funds out there. So that's a benefit as well. And that's something for me to figure out down the road with my tax people come tax season, right? But anyways, what are you guys doing? What do you think about HHIS? Do you wish there was more funds? If you're still here and you're from the US, do you wish you had a fund like this? The rumor around the street is that YieldMax is trying to create a fund similar to this. If so, is that something that you would want to have in your portfolio? Let them know in the comments below, because I'm sure they read them, right? And, let me know how I did on the video. If you could hit the like, the subscribe. I'd love to talk to you again in the future. My name is Mike. The channel's name is Health and Wealth. I hope you have a great day. Bye for now.